Good morning, all my fellow crypto trading brothers and sisters. Happy belated Bitcoin Pizza Day. Putting that up there because I know there's quite a few of my subscribers that may not be familiar with Bitcoin Pizza Day. So yesterday on May 22nd, 12 years ago, a man paid 10,000 Bitcoin for two pizzas. Today, that's worth $294 million. So that is the power of compounding interest, guys. And I just wanted to put that up there to show you how it works with your money when you can invest in something like Bitcoin or really anything that compounds and yields. Okay, so a few minutes ago, I recorded a whole video, probably. I feel like it was probably my most articulate video that I have done to date, and my mic was on mute the whole time, so I have to do this thing again, and I probably will forget some of the points that I made, but that's okay. We shall proceed. Let's jump into the charts here, and I'll show you what I've got. First of all, we're starting with Bitcoin. So here are the things that I want you all to draw on your chart and watch, because this is critical. This is the 4-hour chart, and I have drawn what appears to be a bear flag. We don't know yet until confirmed. The reason why I am hesitant to really say that it's a bear flag, in other words, that it would act in terms of probability as most bear flags, is because our 29,000 support is really keeping us above the water right now. And on the 4-hour, you can see we have touched and held this 29,000 support for quite a few times along the way. And so it's going to take some big volume and big sellers to come in to really drop us below that 29,000, and thereby, taking us below that triangle as well. And then at that point, on the 4-hour, if you're watching this, you're looking for a candle to close below really that 29,000 marker, and another one to open and close below that 29,000 mark. All right, and that will confirm that this is actually a bear flag, and further, selling should ensue. I won't say will, because nothing is ever certain. This is just giving us a probability scenario. Usually these play out to the downside. If I zoom out here on the daily, you can see this bear flag clearly. Now, one thing I have learned, and I'm learning this all along with you, I'm making mistakes so that you guys can see what I do wrong as well, and hopefully correct them to for the future. Somebody once said, there are no such things as failure. You either win or you learn. Well, in this case, I am definitely learning. You all know I doubted this head and shoulders pattern that I saw. And I do this a lot. I see patterns. I see things on the charts. And it doesn't seem like it's possible. It doesn't seem like we could have gone from, when we were at 68,000. It doesn't seem like we could have gone and down to 30,000 or lower. We went all the way down to 25,000. This wick down here took us down to 25,000. All right. So I sit there and I see these patterns and I'm like, okay, well, I know what the chart is telling me. I know what the probability is, but the bias is so bullish. So how could that happen? And I need to set aside what current bias is, look at these charts, and trust what I'm seeing. I say all that to say, yeah, we have another bear flag here, indicating more potential selling, could ensue. It's more likely that selling will ensue than buying, really. And I know I've said that I do think that we might have a little bit of rest where we can come back up and hit our heads on some of these resistance before, falling back down. But at this point with that bear flag there, I don't, I really am not going to bank on that. So let's zoom back here on the 4-hour. So what I'm doing with my trades, and I did go long at the bottom of this triangle, and I am all green in all of my trades. But what I'm doing is I'm putting in very tight stops on any upward movement. And that's if you're wanting to trade in this sideways range, that's the way you should do it. Really look for the bottom of 29K to be touched and a bounce from there. That's what I did. As soon as we hit that 29K, I saw that it held us up 4 other previous times, and so I was like, that's pretty good odds. I'll put in some longs. I went all long with tight stops, all in the profit. So that is the strategy, by the way, guys, that I'm going to be releasing soon to you all. Just stay with me, hang with me, be patient. I promise Stewdamus 2.0 is going to be better than ever, better than before. I don't want you all holding with me into the dark, deep, black abyss of, nothingness, like we did with Luna, or like I did with Luna, no stops. And the other thing is these stops now, you guys know, I don't like stops. The reason I don't like stops is, okay, I didn't do this in the last video, but I'm going to do this now. I just want to show you something very quickly. And I've explained this before, but for instance, I was in God's token. All right. So I saw on the daily this bullish descending wedge, very bullish. So I'm like, okay, I see that. I'm going long. All right. So somewhere around here is where I entered. All right. What did I do with my stop? Well, I was pretty loose with my stop, I thought. I said, if we drop below this descending trend line, I'm just going to have my, I'm practicing my stop levels here. I'm just going to stop out. Okay. So then I get stopped out below this descending wedge. And guess what happens? Over 100% move up. So those are the moves that we're just going to have to accept we're going to miss sometimes if we place our stops in the wrong area. Yes, I could have placed it lower, but this is what happens when you place your stops. What the market movers will do is they'll dip you below a clear trend line level, support level, moving day average. They'll shake you out, they'll shake your pockets out, and then they buy it up and move the market up. And for that reason is why I don't like stops. But I am having to implement these stops because if I don't do this, I tend to become a hodler. And that's not fair to you guys who are looking for trade alerts, looking for new positions to trade into, who have set your stops. Because now I'm holding on with 2 fists, diamond hands, trying to turn a profit on what is now a loss. All right. And it has worked for me before. All right. I know it does work, but I think it takes too much patience for the public example of how we can trade. So all that money that I poured into Luna, I've said this before, I wouldn't have had that if I had stops because I would have probably gotten shaken out. This is a safer strategy. So what we're looking to do now is instead of home runs, we're going to be hitting more base hits. All right. And it's going to give everybody more opportunity as the frequency of the trade alerts will come out at a greater pace as I get stopped out and enter new positions. And so my goal in Stewdamus 2.0 is we're going to just take like $10,000 or 1 Bitcoin, and we're going to go with that. See if we can turn $10,000 into 100,000. I've done that before. I can do it again. Or maybe we'll take 1 Bitcoin, see if we can turn 1 Bitcoin into 5 Bitcoins or 10 Bitcoins, depending upon the length of years. All right. We'll just see what we can do with a flat amount that's easily divisible that you guys can track and follow. And I'll have a new spreadsheet set up so that it's easy to track and trace. I'll include where my stop limits are on that spreadsheet, etc., etc. Just bear with me because it's going to take a couple more weeks to get that all worked out. But I promise you, Stewdamus 2.0 will be bigger and better than ever, and hopefully making all of you guys profit. All right, back to got off track here. So, yeah, draw this flag out on your charts, preferably the 4-hour. Guys, you got to watch this closely. Drop below. You should have your stop limits on all. If you're in longs, you should have your stop limits shaking you out with any move below this triangle. That's what I'm doing. I'm setting my stops pretty tight so that any move below that triangle would stop me out of my positions and I don't take a loss. Now I'm in the green, so I can move those stops up. All right, I don't have an exchange I'm trading on with trailing stops, is which I prefer. So I may use a third-party service in the future. I've been told about some of them. A problem with that is I'm sure that it requires you to make your API public, and I don't like read-write permissions on an API floating across the web. Just from a security standpoint, I'd rather be in the exchange that offers a trailing stop rather than opening up my API to function in that way. And probably none of you guys just followed what I just said. Just trust me, it's not as secure. BTC. So you got to draw this flag. Any move below should shake you out of your positions. And at below 29K is when you'd look to either stay in stable coins, or if you're more aggressive, you would go short. Any move above this triangle, that's where you go long. I got to move it along here, guys. It kind of got sidetracked. Like I said, my last video was perfect, but of course, microphone was on mute for 20 minutes. That sucks. Okay, the dollar here, I've said, is looking like it might be forming sort of a head and shoulders pattern. We have to wait to see. We might bounce here and go up. And if that happened, that would take us, target down would be near that 100-day moving average, which would give us some reprieve in the markets. All right, dollar's getting weaker. That means inflation, which should be factored into the prices of the indexes. And I've said before that I do want to see us come back down and touch the top of this previous bull flag, but it looks like this 100-day moving average might be moving up to intercept our price action. Fair enough. All right, that's good enough. If we can touch that and then bounce and head up, and I said eventually I think the dollar is looking so strong, we might touch a line, a descending black line that has not been touched for 20 years. But in the meantime, this could give us a little bit of rest, reprieve, whatever, for the markets to go up a bit. And that all makes sense if we look at these other data points. Let's go ahead and do that. VIX, however, is something that doesn't align with that indicator. So we're having some conflicting patterns here, guys, because what I see here looks to be a bull flag. All right, so we have our trend line here moved up into this bull flag, and this would give us enough if we jump to the top side of this triangle, this bull flag, so that we could go up and hit this resistance point way up here. I'm not sure what news event or what geopolitical situation, etc., would propel us to that level. But if the VIX goes up, that is our priority indicator at this point, more so than the dollar. Especially with that type of move up. That supersedes the indicator of the dollar. All right, that would be our strongest priority indicator to watch. So this VIX is looking like it could move up further, and if that happens, the markets would move down. And that makes sense as well, guys. I've said this before, but we do have still some room to move down. The Dow Jones could actually move down to 30,000 still. The S&P can move down to this 365 level. These are all about 7% yet movement downwards. NASDAQ has bounced off of a level. But again, it could come down to 133. That's also about 7%, 8% below where we are. So we still have some room on these indexes too. So caution, guys. And that actually aligns as well with this new chart that I've been showing you guys. Let's zoom out to the weekly here. Lots of scribbles on this screen. As I've talked about this in the past few videos, this is the NASDAQ 100 stocks above the 200-day moving average. And every time we have either hit the 16% support or 7.5% support, it has indicated to us, guys, this is when the market has capitulated and reversed. So we have 1, 2, 3, 4, 5, 6 past historical records of capitulation in the market. And it's every time these NASDAQ 100 stocks, you know, if there's 15% that are still above, or 16% that are still above the 200-day, or 7.5%, and we touch those support levels, that is a good indicator of where the market could capitulate. Now we've dropped below this 16% level and are headed down to the 7.5% level. So we've got to watch that closely, because if we get a touch here, again, that correlates with the data I'm seeing on the Dow, S&P, NASDAQ, that we could further, you know, descend a little bit further. And the VIX is showing us too a bull flag. So that upward movement of the VIX is the priority indicator and could take us down further. Remember, this dollar, this potential head and shoulders pattern hasn't played out yet, so it doesn't mean we're going down there. This is just what I'm anticipating could appear. All right, enough said about that. Let's just jump to the Bitcoin dominance chart, see what we're doing here. So you see a breakout of our above our triangle, formed another bull flag, went up, hit the target, another bull flag. I have this arrow drawn, but that's kind of a little misleading, because this bull flag is showing us that we could go up even further here. All right. And again, that makes sense with the data I'm seeing. All right. So that would be trouble, more trouble for alts, which with everything that's happened with the Luna UST catastrophe, trust is vanished from the market right now. And all we have is fear, uncertainty, doubt. More FUD. That is not, it's going to take a while, guys, for confidence to be restored in this market. I'm telling you, this is a historical event, and this will take years to recover. This is going to be a slow recovery process. I don't see us just flipping the switch and having a bull run like we had the last couple years. We are definitely now deep into bear territory. We have to respect these bears, guys. We have to. All right. Anything else that I want to say in this regards? Now let's jump to our concluding remarks, because we have two minutes on this video and all done. So as Bitcoin continues to hold above that 29K, the markets are slowly accumulating. However, we have to be prepared to trade moves in either direction at this point. So again, draw that out. All right. And move above, you can take longs if you're so inclined to do so, but put in very tight stops, guys. And you might get stopped out along the way, but you know, we are in bear territory. We have to respect these bears. A move below should stop you out of any long positions you currently are in. And the reason why I say you should set your stops so that if you see Bitcoin drop below this triangle on our charts, it stops you out of your positions equally. All right. That's the way I would trade this. Other data points this week, and I'll put this in the description. U.S. economic data, manufacturing, services, new homes, durables. Fed FOMC minutes on Wednesday. We have to watch that. That may affect the markets as well. And then these other things, jobless claims, pending home sales, etc., etc. I'll put this in the description. All right, guys, running out of time here. I've got 25 seconds, so let me say goodbye until the next video, and peace, y'all.